and good morning, all. Alex, good morning to you as well.
Good morning, Mark.
Yeah, we're happy to have you join us, and for what we hope will be an informative and useful series of sessions this morning. We've got some great speakers lined up. Before we begin that, let me just speak a little bit about PKF O'Connor Davies not-for-profit practice. For those of you who are not familiar, we've been serving the not-for-profit community for roughly 130 years, for the entirety of our firm's existence. And over the course of those years, we've grown to, I would say, the nation's premier not-for-profit accounting firm, serving more than 4,000 not-for-profit entities, and using almost 100 partners doing so, and roughly 250 staff assisting with that. So a very large group of resources that we use for our mostly attest and tax services. However, in addition to the attest services that we do provide, we do have supporting groups. As I mentioned, we have the Exempt Organizations Tax and Advisory Services Group. We have the Cybersecurity and Technical Consulting Advisory Services Group, the Operational and Risk Advisory Services Group, the Pension Group, so on and so forth. So lots of moving pieces, I should say, that support the not-for-profit clients that we serve. So sort of full gamut. And what do those not-for-profit clients look like? Well, social service organizations, charities, private foundations, cemeteries, religious organizations, cultural institutions, higher ed institutions, all types of educational institutions, including charter schools. So again, a full gamut there of clients that we serve from A to Z, so to speak, in terms of not-for-profit type clients. Alex, I know you're speaking today with Eunice, and Alex, of course, is one of our partners in the not-for-profit group, and Eunice being a supervisor in that same group. Another speaker today will be Melissa Modelson, who is a partner in our Exempt Organizations Tax and Advisory Services group. And lastly, we'll be joined by Suma Chander, who is in our Technical Consulting and Advisory Services group, and she'll be speaking on AI. So, Alex, I think we're ready to go. I don't want to hold everyone else in suspense here with the first session that you and Eunice will be doing. Remembering these sessions will be about 25 minutes each. There's 4 sessions out there. You can submit your questions, as Harding said, and we'll try to get to those at the end of the session. If we don't, there will be a follow-up to any questions that are answered, and you'll get emails that respond to those questions. So if you don't hear an answer to your question, remember that we'll get back to you in a few days. Okay, so our first session, Eunice, you can join us on stage if you like. Both Alex and Eunice will convey their thoughts on getting your organization ready for an audit. So I'm going to step backstage, and Alex and Eunice, take it away.
Okay, thank you very much, Mark, and good morning to everybody. So today what we're going to be covering in our time together is how to get your organization ready for an audit. And, at the very sound of it, people may get a little bit scared. How do I get ready for an audit? Going through an audit, it's a painful task. It's something that, I'm scared of doing. And really, our firm and our practice really tries to make it as smooth and easy a transition as possible for your audit to go smoothly. And we're hoping in our short time together today, our agenda really is to convey to your organizations what you can do when it is audit time, but not just audit time, year round, to get yourself ready for an audit. And I'm going to kind of add a little more to that title, that the audit can run efficiently and effectively. We've all seen situations, unfortunately, that an audit may not go as timely as we want it to, that maybe audits are delayed because the client is not doing certain items that they should be doing. So hopefully these little pointers will assist you in that. And again, if there's any questions, as Mark mentioned, we'll try to take them at the end of the session. Okay. Just go through my slide. So again, Mark mentioned I am one of the partners in the nonprofit practice, and one of the partners that are in our Long Island office as well, doing those audits there, along with Eunice, who's our supervisor. And I do a variety of the nonprofit work that we do, which is social service agencies. I lead our cemetery practice as well, and do a fair amount of teaching within the firm, especially in the area of single audits, which I know a lot of you may be getting those federal funds. And again, just a variety of different associations that I'm on. And then with me also, we've got Eunice. And Eunice is one of our supervisors in the practice, so she also does a number of these clientele in the social service arena, credit unions, museums, schools. She does her engagements and leads the efforts, and also does serve as a board member, and is a graduate from Hofstra University. So again, welcome here, Eunice. Also, I do serve on the New York State Board of Public Accountancy. So again, the opinions that we are talking about today, if we do give any opinions, are not those of the Board of Accountancy or necessarily those of P. Careful Connor Davies. So just kind of keep that in the back of your mind. Our agenda today is basically to do, two real areas. So I'm going to start us out with some best practices to ensure audit readiness. And then Eunice is going to kind of join us to do assembling the year-end documentation and actually preparing for the audit fieldwork. And of course, if there's time, some conclusions and questions. So again, we're going to try to get going on that. We've got about 25 minutes today to kind of convey some of these things to you. So let's take a look at the first part here. Timely reporting. Let's understand what timely reporting is all about. This is obviously something that as management, you want to make sure that your data is always available throughout the year, not just at the audit time. Sometimes we as management, have a belief that, I need to get this ready for the audit and it's got to be ready for audit time. So I'm June year end, and that means I need to be ready and start doing all my accounting and my bookkeeping and my bank wrecking, around May time to get ready for the auditors. And again, that's a nay. All right. This is stuff that should be done throughout the entire year, because it's important that not just the management, not just the auditors are on the same page. You all want to make sure that the board is on the same page. If you are giving a monthly financial statement and it says you're going to be making a profit of $1 million, and the audit comes in and you start to get your books and records ready, and then you discover that, you have a loss of $4 million. Somebody on the board is going to question that. They're going to say, well, wait a minute. How come you did the audit and now all of a sudden we've got an enormous loss? What happened? What's going on that this occurred? So again, monthly analysis work is very important. How frequently is your reporting done? We have clients that you're doing a monthly close, monthly reporting, quarterly. I don't think anybody does it semi-annually, and certainly nobody is doing it on an annual basis. That's definitely not a good sign. You want to create a financial close schedule that includes, what are your deadlines? What are your tasks per your team member, right? Per your team member. Let's just have a schedule. Who's going to be doing what? What is their assigned date? When is it due? Who's going to be reviewing that work? And that should be posted on your intranet and being adhered to as best you can. So there should be a monthly close. And again, we typically would suggest to clients cash. We should be having reconciliations done and investments, your accounts and pledges receivable, your payables, revenue. All of these areas should be done on a quarterly basis. There should be a preparer and a reviewer. And again, everything is done electronically nowadays. So maybe just, in Excel, you can put down it was done and approved, signed. But somebody should be reviewing. If anybody is preparing the work and it's not being reviewed and y'all are waiting for the audit time to start, that's a lot of work on the reviewer. But if a reviewer is doing it on a regular basis in accordance with that schedule, that at least makes things a little bit easier to follow. The regular reporting should also include the interim financial statements to management and the board. Again, it doesn't have to be a full-blown set of financials with notes, but the board should be getting that income statement, a balance sheet, a cash flow to see just what's going on. And these reports should be going to the board for their review. All right. And ideally, You want to make sure that the boards have this information so that this way they can look at it to make important decisions for the organization as well as yourselves. They can look at things, you can look at things, to look at analytics, to look at fluctuations. Does something make sense? Gee, no, you know what? I'm really looking at this thing right now, and no, this is wrong. This doesn't make sense. What's going on? Why did these numbers change so much? Let's take a look at it. And you want to catch those errors before the audit process starts. Again, we pride ourselves as a firm. We're not a gotcha firm. We just would say to you, well, gee, what happened? How come we're making this journal entry? How did you miss this accrual? How did you miss this reconciliation? So that is very important. Timely reporting also gives you the ability to have constant oversight of the financial resources. Again, the expression that we oftentimes hear at our firm, minding the store. You need to be minding the store. Where are my resources going? Am I collecting my receivables? Gee, the cash is going down. The receivables are going up. Not the kind of relation that we want to see. We want more cash in the door to pay our bills on time. The executive director, the CFO, the board of directors, they are not the only people that can handle these challenges, these goals. Everybody needs to work together. Leadership, board members, controllers, program directors, you need to work to get your job done to the best of your ability. But it all starts with timely and accurate reporting. How to enhance the understanding of this reporting? There's a lot of what we call now these dashboards. And we've seen management doing a much better job now of getting these dashboards, so to speak, really moving and really, created and being customized to meet their needs. Okay. So, for example, maybe we have a dashboard. What are the current numbers to the prior period numbers? What are the explanations for the fluxes for major changes? Using the regular submission of reports to assist in decision making. Are we going to have enough cash? No, we're not. We're going to have to go and get ourselves maybe a line of credit. Do we have enough of an ability to do that? Do we have loan covenants? Are we going to be meeting those loan covenants? Have the reports to better understand and appreciate the organization's story. So that's another thing too. Again, you can give the story to make it a better decision-making process for those charged with governance and, of course, to management themselves. Budgeting. Budgeting is another thing that we need to take into account. So obviously, when you're doing your budgets, and again, a lot of you know this from experience, you're talking 3 to 6 months before the start of a fiscal year. Okay. It's an ongoing cycle. It helps organizations allocate resources and demonstrate fiscal responsibility. Estimating revenue and expenses ahead of time and adjusting as needed during the year to remain aligned with the nonprofit's strategic goals and, of course, their mission. Getting board approval of the budget prior to the start of the fiscal year. And, really as part of your analysis work. And again, you may ask, well, why are we talking about budgeting, Alex, as part of getting ready for an audit? We are going to look at your budgets. We're going to say to you, can you show us the budgeted number? And let's compare how you came in. And then we're going to ask you, gee, why were you under budget? Why were you over budget? And we all know life happens. Well, we were expecting the city to give us a grant and the funding fell through. Well, we did get the money. We couldn't spend it in time. That's why you're seeing some more advances on the books than we would have liked. So there's a lot of different explanations, but we do ask, did you monitor that budget? Did you compare the budget against the actual numbers? And what are the explanations? Communication between departments. So obviously, when we talk about communication between departments, the biggest communication we like to see occur is between accounting and development. And the reason we say that is a lot of times, we love your organization and here's a check for $1 million and it's going to go to development. It's going to go into that kind of office that, well, I've met with your development person. They told us about this program you're doing. We love it and we want to sign up. Okay, give us the check. We'll get it over to accounting and we're good to go. And a lot of times, accounting will then go back to the development department and say, well, wait a second. You got this $1 million check. Well, what's this for? Is there a restriction on this money? Can we use it just for whatever purposes? And it says $1 million, but did the check come in? Are we getting this in installments? There needs to be communication because obviously accounting needs to know how to properly record it. Now, many of you that have development departments probably have your own software that you're tracking on, maybe Blackboard or anything like that. But you also want to ensure that their reporting is at least reconciled to yours. Development may say, oh, we brought in, $2 million of, revenue this year. And accounting may say, no, you didn't bring in the 2 million. You actually brought in 4 million, but because you have $2 million of pledges that you'll be getting over the next couple of years. Usually we do tend to see differences in that area. So really development's going to focus on how much did I raise? What was the cash that I got in the door versus the right accounting rules? Again, not a critique of the development. It's just they're not accountants. So you definitely want to be meeting monthly will clear the air on what cash did I get on a pledge. Can't tell you how many times we've seen that development says, oh, I raised $50,000. No, you didn't. That 50 was really being offset against a pledge. So we just got to be very cautious with that. Restrictions. What are the restrictions? Again, if you're a development director, you're going out to lunch, you're meeting with these people on a regular basis. The CFO or the controller is not part of those meetings. They don't know what you talked about. Performance metrics. I'm a donor. I love your organization. I'm going to give you this money, but it's on the condition that you serve 20,000 meals to the homeless. All right, well, accounting's got to know that to make sure we've met the condition. Review of any prior year findings. We would hope that many of you are not part of this slide. But if you are, and it does happen, where are you in terms of your findings? Where are you in terms of recommendations? Gee, the auditor gave me a management letter and I had some findings, or I got findings from a single audit that I was doing. And I gave them a corrective action plan. Did I actually follow up on that as management? Did I actually take care of that, to do? Because if I didn't, those auditors are going to recycle the comments again. And as Eunice will talk about later on, when you get to the uniform guidance, this is a big deal. The feds do not want to see comments, first of all, any comments, but they certainly don't want to see a repeat of findings. So it's very important that if you do make the commitment, you follow through with that commitment. What are the key takeaways? There's no single financial reporting approach or format that's appropriate or meaningful to all organizations. We have clients that show things very differently, some that like to do classified balance sheet. They just like that presentation. Some that like to have an operating measure, believe it or not, of what their true revenues are. Again, not required, but it's your statements. We always tell our clients, step back on the financial. What is it that you're trying to show your stakeholders? What's the key takeaway? What are we learning from this? What can we do to focus our attention to the bigger picture? Because at the end of the day, you may get a story that you don't like as management. I've been running this program for 20 years and wow, we're losing our shirts. Maybe this is a program that we no longer feel is in alignment with our mission. And I cannot tell you how many times we've seen that in light of the pandemic and coming out of the pandemic. Organizations are redesigning, restructuring their missions to try to get themselves a little bit better off. But at the end of the day, that only is going to happen with good financial reporting, good analysis work. So again, even though we call our session getting ready for the audit, we're kind of getting you ready to manage your operations too. Because if you're not reconciling on a timely basis, how do you know where your business is struggling? Some of you that are on this webinar today, and we've got quite a number of you, a couple hundred actually, and I'm sure you struggle with that too. How am I doing financially? Is this program the right way to do it? Is there something I could be doing better, differently? Planning for the audit. So now, kind of how do I get ready? What's the formality of that? Communication. Communication. So, for most of you now, I'm going to say, June 30th is upon you, right? It's almost here. Happy New Year coming up. And, the meeting should begin right away. Myself and Mark were actually on a call yesterday, and they're a June 30th client, and we started talking about dates for the fiscal 24 audit. It's never too early. There should be a meeting with management, and that meeting should be talking about a timetable. We'll talk about that in the next slide. What is the timetable? We'll talk about that shortly. After that meeting, the auditor should send over to the client a PDC list prepared by client outlining the various items needed for the audit. And then, of course, there should be a central database. We have a SureLink platform that is secure, that allows you as the client to upload and for us to see real time what's missing, what's pending, and what needs additional follow-up. So this next slide here, this is an example, again, of a timeline. And the best way to do it, believe it or not, is to work backwards. Okay, client, when is the meeting date? When are we expected to meet with the board? Oh, Alex, we're going to be meeting late October and early November. Okay, so that means you as management need to have a draft in October. We need to be doing that audit when? Possibly in September. When are we going to get our to-do list? Late August. When should we be meeting with management and those charged with governance? Mid to late August. So all of these things, it may seem silly, but this is the plan that we need to adhere to if we expect to get our audit done timely. This is the conversation you should be having with your audit firm. This is important because it sets the stage for both parties. Responsibility, as we see on the next slide for internal control, it is your responsibility as management. It's not our responsibility to establish internal control. That's up to you. We can guide you. We can always direct you. That's not a big problem. But we are not able to interfere. All right? And our role with regards to internal control is evaluating. Do you have a control in place to mitigate the fraud risk? And you need to assess control risk to determine the nature, the timing, and the extent of procedures to be performed. That is very, very important. Finally, taking a look here at the fraud triangle. So the fraud triangle, again, this is something that we look at, and we want to bring this up to clients, because it's part of the audit. We have to look at, fraud in an organization and consider it as it relates to the audit process. And to do that, we conduct the interview with various personnel of the organization. We ask, how do you get ready? Just be available. Get on a Zoom call, meet with us live. Don't just hand over a questionnaire. Make yourself available to us. The fraud triangle, again, talks about, 3 areas that auditors have to consider. What are the incentives and pressures present as an organization? What opportunity is there to commit fraud? And what is the attitude and rationalization? Somebody may feel I'm stealing money, but I'm not because I was entitled to it. So again, all of these different facets are what we would envision you doing to get yourself ready for an audit. And that's stage 1. I'm now going to turn it over to Eunice, and she's going to talk to you about assembling the year-end documentation and the fieldwork. So Eunice, why don't you walk our friends through that next stage?
Thanks, Alex. Doesn't quite get the heart pumping as much as fraud, but we'll move into this assembling year-end documentation and fieldwork. Good morning, everyone. I see some familiar faces in the attendees, so thanks for joining us today. So a few key points to consider regarding the trial balance. Of course, you want to make sure that everything's in there, right? All your revenue and all your expenses are recorded in there. All your bank recs have been done. Your trial balance zeros. I know sometimes it doesn't work out that way, but we always hope to see it. And then also that you follow all your monthly close procedures. I know Alex talked earlier about having maybe a list that shows who does what, and we just usually request on our audits that we see what your monthly close process is and try to kind of follow it to ensure that you're, adhering to that. In addition, of course, compliance with any regulatory requirements. He mentioned the single audit, which takes a ton of documentation, but also just in general, some social services organizations or any type of different organizations will have different requirements. You want to make sure that your trial balance is taking those into consideration. In addition, obviously completing the trial balance, making sure that your trial balance is fully complete, that all your year-end transactions and adjustments have been recorded. There are times when your audit is starting. Sometimes, as Alex discussed, the timeline, we're backing into it, and sometimes that audit begins very close to your end. If that's the case, if there are additional entries, just let your auditors know. At this point, we're going to give you a preliminary. We expect that there's still going to be, some changes to depreciation expense or, et cetera, so that your auditors have a heads up and there's no surprises during the audit. Now, we wanted to touch a little bit on types of revenue that a not-for-profit will see. And of course, so you receive money, and that can be either a contribution or an exchange. And then the contribution, it can also be conditional, unconditional, without restrictions, or unconditional with restrictions. So the first one we'll touch on is exchange. And that type of fund receipt, a lot of not-for-profits will say, I don't have that. All I have is contributions. And the biggest one we see, especially in our small not-for-profits, is a gala, right? You're hosting a gala, you have attendees. Those attendees are receiving a meal as part of their ticket. That meal is technically an exchange transaction, right? Other things we'll see is, for example, if you have a small not-for-profit who may have a little store to sell, trademarked items or things like that. That will be exchange transactions there. So when we're looking at those, you really have to take into consideration, number one, the value of the exchange. Because let's say you do have a gala and it's, let's say, $100, okay, and the meal is only $50. So $50 of that would be exchanged. The rest would be a contribution, right? So you want to make sure that you take all those things into consideration when recording your revenue, because your auditors will ask for these things, especially they'll see the types of events that you're holding, etc. And these questions will come up. You want to be prepared. Sometimes with the sales sheet, right? How much the tickets cost, things like that are easy to keep on hand for when it's audit time. The other type of revenue, of course, is the one we love the most, which is a strict contribution, right? Voluntary transfers. Some part of your organization, they want to give you money. Now, do they want to give you money and say, well, I only want it for, I think Alex mentioned feeding the homeless, right? You're going to want to make sure that you have proof of how you fulfilled those conditions. If it's unconditional without restrictions, make sure you have a letter stating that. Make sure you have some type of proof that that's how the money was provided. If it's just sometimes nowadays we see a lot of donations come in online, right? So you'll have some type of ledger showing that money flowing in, and make sure that you are considering that there is no receipt of a benefit to the contributor, right? There's no way that they're getting something out of it, whether that's, again, like I said before, they're contributing at an event, is that above and beyond the ticket they bought? do they just attend the event and decide, okay, I want to give you $200 more. I love this organization. We want to make sure that you have kind of all the backup for that. Again, as Alex said, we love to be prepared. So if you could, I know that sometimes we wait until the year end to get these things going. Obviously, the more you do ahead of time, the better. Sometimes we will request some preliminary items ahead of year end. The more we can do ahead of time, of course, makes the audit a lot easier. But again, providing these ahead of time gives the team the opportunity to perform a proper risk assessment. Alex mentioned that we typically will like to have a planning presentation ahead of time. And if we have a preliminary trial balance at that point, we love to talk about what are the riskier areas that we'll be testing. And hopefully those will translate right through the audit since we have some of that preliminary information. In addition, if we have some of that information ahead of time, we can alleviate some of the requests that come through. I know Alex mentioned earlier, SureLink is a big thing that we use here, and I know other audit firms use it as well, just to kind of keep a better grasp on where we're at, what we've requested, what you've fulfilled, what we've accepted, etc. And also the source documents that have been requested. Of course, there's some testing that has to be done during the audit. There's, for example, year-end journal entries. That's always going to have to wait until audit time because we can't do that ahead of time since the year-end entries have not been posted. But we try to really request anything we can ahead of time to make it a little smoother process. And lastly, communication. Alex touched on this. Communication is so big, right? We love to have SureLink as our real-time open item list. As mentioned on the slide, again, we use SureLink. There's a lot of different type of workflow management software now that replace the standard, email. Here's what we need. Automation of the list and documentation of the workflow, of course. And then lastly, at the bottom of the slide, which I love to do to my clients, and I suggest it to anyone who has an audit going on, a weekly phone call with your audit team. Talk about where they're standing. Are there any questions that we can just go over quickly on a phone call? Are there any issues that come up? Is there anything that, something new that happened? Is there something that you're trying to work through you're unsure about? And yeah, that is all for me. Thank you, guys. Alex, I'll throw it back to you.
Okay, thank you very much. So again, we're kind of at the close of this particular session, but we thank you all. So again, some nice strategies of getting ourselves ready for an audit, being timely, being efficient. So we do thank you. And again, if there's any questions, we'll try to get to those. We're out of time right now, maybe towards the end of the session. We'll see what we've got. So thank you. I think, Mark, we're going to have you come back on stage, introduce our next speaker, and we'll definitely see you all later.
Mark, I'm sorry, I believe you're muted.
Thank you. Thank you for that. Yes, I believe I was muted. So the speaker is going to be Melissa Modelson, and Melissa is going to be talking to us about updates in both federal and state tax compliance issues. And I can tell you that, for a topic like tax, Melissa is probably the one person that I've had experience with that can make it, I'm not going to say fun, but bearable. And she's got a great way about her. I think you'll enjoy her presentation. And again, Melissa, take it away.
Thank you, Mark. Good morning, everyone. So as Mark said, I will try to make this as painless as possible. I know it is tax. It's also early in the morning. So hopefully I can keep you awake with a couple current tax compliance issues that we've been seeing in the last couple of years, just with some different things going on. So we'll start with the e-file mandate that I'm sure everyone's been feeling not only at the federal level, but it's now coming into play across the states. And we'll talk about what the purpose of that e-file mandate is creating, which is resulting in IRS and New York State examinations and the different things they may be looking at as a result of requiring returns to be e-filed. And then we'll just touch on two specific areas that have become more of a hot topic that we've seen with public charities, which is your public support test. I know we get a lot of questions, especially the last few years, in terms of getting from the funders in terms of tipping someone's public support test, but we also get it from the public charities themselves who are concerned about the money they are getting from their funders, and it potentially endangering their public support tests. And then since it is an election year, we'll end with a little bit on just what politics and lobbying and what a nonprofit can and cannot do, because there are some nuances with that. So, with the Taxpayer First Act provision, this was a law that was passed a number of years ago, but it began requiring returns to be electronically filed. So, they rolled it out slowly. They started it with the Form 990. Now, any type of Form 990 is required to be electronically filed. So, that your short form, your Form 990EZ, is a mandatory e file requirement. They expanded it to the Form 990T in the last couple of years. And then as of this year, if you're not a 501c3 and you're making political contributions, you have to e-file your 1120 POL if you're required to file that. And if you have any type of excise tax situations, which commonly what we see is when you pay your executives above $1 million, that's on a separate form, the Form 4720, which also requires to be electronically filed now. Late last year, they also started requiring the applications that you fill out to set up a new nonprofit, whether you're, spinning off from another entity, you're creating a new subsidiary, all of those applications are now mandatory and have to be e-filed online. So you'll see that there's a lot of different forms, and the IRS is now pushing back and requiring that electronic filing. And the reason for this e-file mandate is because they're using the information from that electronic filing to help determine where they want to start their examinations, and the states are also doing it as well. So what they're doing is they're scanning these documents, they're running algorithms, they're running queries, they're doing a data-driven approach to the documents because it's in a scannable, readable format, and they're using that research to determine potential areas of noncompliance or risk. So one example that we've seen over the last few years is organizations that hire a professional employer organization. So instead of you issuing your W-2s, remitting the payroll taxes, you hire another organization to go and do that for you. So when those W-2s are being issued, they're issued under the EIN of your PEO. However, there is no box for that on your Form 990. So when you're filling out that tax return, you're disclosing I filed 100 W-2s, and I remitted my payroll taxes and did everything accordingly. They're now scanning these documents and they're going under your EIN. You stated on your return you filed 100 W-2s, but in fact, when they look at your EIN, what's on file is nothing. So then they think they found an area of potential non-compliance. They reach out and say, we're going to come and do an examination because you're not compliant with payroll taxes. And we call these nuisance audits usually because typically whenever we've spoken to an IRS agent, they immediately, when we tell them they have a PEO, you hear the sigh and it's, oh. And then it just becomes, a process you have to go through. But this is something that they're doing that because of the electronic filing and the e-file mandate, they can scan these documents and that's how their system is working. They're going, oh, this looks like a potential area of non-compliance. They did something very similar with organizations that had rental income and debt on their books. Rental income can be unrelated business income and taxable to an organization. There are a number of exceptions to that rule. But what the IRS was doing was they were running algorithms, they were running queries in their system going, I see organizations that have rental income, they have debt on their balance sheet, there must be debt finance rental income. If they're not filing a Form 990T, we need to audit them. And a lot of times what they were finding was when they went in and started asking questions, the debt was a line of credit and the rental income and the debt had nothing to do with one another. But that's how their system is now working. So this e-file mandate is expanding the areas of potential non-compliance And it may end up resulting in a higher risk of examination, not necessarily because something's wrong, but because of how those queries are working. If there's potential red flags on your return, you may be getting reached out by an agent saying, that we found this. So there's a number of different examples in terms of potential IRS examinations as a result of this. One thing we're seeing, if you have an inconsistent or incomplete return, so if you check a box saying that you're filling out, Schedule G for your fundraising, but you don't actually attach the schedule, if you, leave it, you attach it, but it's blank, you're most likely going to get a notice because they're able to scan and run queries and figure out, oh, wait, this is missing. They said they were doing this, but it's not here. So you want to make sure when you're looking over your returns, whether you're looking at it through management's eyes, you're looking over it as a board member, that the return is as complete as possible. You don't want to see a checkbox saying you're attaching something and it's not there, because it's because of this electronic mandate, there's a stronger than normal possibility that you may get pulled for examination because of it. They still get them from referrals. So whether there's complaints from the public or complaints from another regulatory agency. So if the state attorney generals are having issues, they can file a complaint with the IRS, and that can lead to a potential examination. The data matching. So like I said, they're matching those W-2s and 1099s. They're looking at other potential areas of tax compliance that you may be reporting on your return, and they're now matching that up in their system because everyone's using the same format with their tax return. So you want to make sure that if you're saying, I issued 1099s, that that's the correct number, because you may get a notice saying, well, you said you did, but we can't find them. And you want to make sure you have that backup and support so you're prepared in case of a potential examination. If you have compensation over $1 million and you're not filing that excise tax form, we have seen those examinations happen. Be prepared. They are scanning that. That's an easy one for them to find. They're going to go through Part 7 of your return. They're going to look and say, you have employees and you're saying you're paying them over $1 million, but the box where you have to check to say you paid them over $1 million and you paid the excise tax is no. Why? So you have to be prepared for those sorts of things. You want to make sure you're checking these areas, just because it creates now more of a risk for the organization of the IRS to come and pay you a visit. And Lord knows nobody wants that. If you have a failure to file, so this is another one we see with organizations when in the statement of revenue, you may accidentally report income that's unrelated business income. And it's not, it just got reported in the wrong column. Because of these queries that they're able to now run, they're going to look and say, you reported unrelated business income on your return. However, you didn't file a Form 990T, please submit. So you may end up resulting in having to amend your Form 990 to get it into the correct column, or it may have been in fact that you did miss that Form 990T, and now that's late and you have a different issue. So you do want to make sure that if you are filling out that information, if you're putting something in a column, make sure you understand what is it going to trigger. Are there going to be more questions? Is there something else I need to do if this is reported on the return? Because nobody wants the IRS to pay them a visit. You don't want to have a missed return or an incomplete return, because it will just cause a whole host of other issues. One other item, it's not on here, that I'll note, that I can't say that it'll guarantee an IRS examination, but it's probably as close as you can ever get to a guarantee, is if you have the great misfortune of having to fill out in the governance section that there was a misappropriation of assets. Say you had ransomware, you had an embezzlement, there was some type of fraud that took place and it exceeded the reporting threshold for the return. Answering that question yes is probably as close as you can get to almost a guarantee of the IRS coming and doing an examination, because now they're concerned. It's you're reporting there was a misappropriation of assets. They want to know what happened. Why did it happen? What did you do to correct it? What are you doing to make sure it doesn't happen again in the future? So that question is usually a trigger that at some point within the next couple of years, they are going to come and pay you a visit, and they're going to have a lot of questions. So you want to make sure that you're going through this, you have everything cleaned up, ready to go, in case they do come and pay you a visit, because they're scanning all these documents now and they're looking for this information. Now, beyond the IRS doing this, we're starting to see this also at the state level. So I'm sure everyone here, if you're filing in New York, you know the Charities Bureau created a New York State portal. It became mandatory recently in the last year or so. So with that, well, you'll see here there's a potential few issues that show up. So I focused on New York State just because we are doing this for Long Island, so that we focus there, our attention there. So with the New York State portal, we have seen a lot of issues recently with New York State pushing back on the information that's being uploaded into there. I'll say it's been an experience, this electronic portal with them. So they're doing the same thing that the IRS is doing. They are scanning through these documents now. In the past, everyone used to mail in that Char 500. It would be, a big package of here's my 990, here's my Char 500, here's my financial statements and a check. And someone had to physically go and scan all those documents in and upload it to their portal. They got away from that because now they're requiring everyone to use their electronic portal. They can now do queries and run scans on documents. And we've seen a lot more questions now coming back from them. So one thing I'll mention is loan receivables with an officer or a board member. They are not permissible under New York State law. They are allowed under federal law. They are not allowed in the state of New York. We had an organization that did have a loan receivable with an executive director. New York State scanned through the return. They saw it. They went after the organization, the Attorney General. So a notice was sent out. They were required to immediately pay back the receivable. It was no longer allowed to be outstanding. It had to be cleared. And they made the board member sign a document, every board member, stating that we know we can't do this. We won't ever do it again. Something to that effect. So you want to make sure if you're an organization and you have loan receivables with an officer or board member and you're disclosing that on your balance sheet or you're disclosing that on Schedule L, I would strongly advise you to start having conversations internally about removing that receivable and getting it cleared because it's not allowed under state law. In the past, it was much more difficult for New York State to find this. They manually had to go through and scan these documents. It took a lot more manpower and a lot more time, and it just wasn't feasible. That is now going away with this New York State portal. They're doing something very similar with conflict of interest policies or whistleblower policies. Under the Revitalization Act, those are required policies. Any nonprofit in New York, you have to have conflict of interest policy. Whistleblower, there are thresholds in terms of size. So it has to do with you have to have revenue above $1 million and more than 20 employees. But again, they can scan for this. If you're answering that question on your return is no, I don't have these policies, be prepared for New York State to come in and start sending notices. And they are doing it very frequently. We've seen other issues with financial statements with New York. New York State is one of the states that requires nonprofits to have GAAP-based financial statements. That means you can't have financial statements that aren't on the accrual method. New York State is not accepting them. They started seeing that as organizations were using the electronic portal and rejecting the filing, saying you uploaded financial statements saying you are on modified cash, and that's not acceptable to us. Please resend. And they gave you 20 days to go and respond, which to get an audit done in 20 days, I think is a bit absurd, but that was what they were doing. So you want to make sure that things like that you are prepared for because they are able to do the same thing the IRS is doing in terms of scanning through these documents and finding those errors, the things that they don't agree with that aren't allowed or permissible under state law. And they're going after the organization and saying, no, you can't do this. please fix. And, they're not giving you a significant window of time. So you want to make sure, because the more and more these states are going to go electronic, so this won't just become a New York State issue. We're going to start seeing it. Massachusetts just went electronic recently. So if you start soliciting and operating in other states, you have to be aware of what their laws are. Some of them, like the loan receivable, is a nuanced law. It's a bit out there, and it's not something someone may realize right away, but it's something you just want to pay attention to as you're going and using these portals, because this is going to result in additional examinations. This is how they're figuring out where they should be looking at things. They're finding their potential areas of non-compliance because they're able to do it in a much more easier fashion. So you want to make sure you're prepared when you're submitting your documents. Beyond that, the two schedules, I know that we're going to take a little bit of a left turn here. We're just going to focus on two schedules for your organization this year, which is your public support test and then the lobbying that may be reported on a return. So if you're a 501c3 organization, the Schedule A is probably the most important schedule you could be filling out on your tax return. It's not the fanciest one. It's not the one that if a reporter picks up your return and wants to write an article about you, they're focusing on, how much are you paying your executives? Do you have transactions with your board members? They're not looking at this schedule, but from our perspective, from the perspective of an organization, this is the most important schedule for a 501c3, because this is your reason for being a public charity. You have to prove to the IRS annually on your return that you meet this public support test. So you start off as a public charity, and then within that realm, there's 4 different types of public charities. We're going to focus on the 2 more common ones, which are public charities under Section 509A1 and 509A2. And the main difference between those 2 items is how you're getting revenue. If you're an organization under Section 509A1, those are organizations that are contribution driven. So the majority of your revenue is coming either from grants, contributions, donations from individuals, whether they're coming from the government, private foundations. Doesn't mean you can't get money from anywhere else. It just means that the majority of your funding is coming from there. A 509A2 organization is more of your fee-for-service type organizations. So they're getting a lot of funding. Maybe it's tuition. They're getting maybe rental income. That's their purpose, is to provide housing, and they're collecting that rental income. It could be an admission base, so like your theaters, they're selling tickets. So those are your 2 main types of public charities, and each of them has to meet a public support test. And basically what that means is they have to get at least 33 1/3% on that test. That means you're publicly supported. You could get 66% of your revenue essentially from one source and 33% from various sources. So this test can get very complicated. The one area where we see the most issues is under 509A1, which is where private foundations are donating to these organizations, and they're very concerned about tipping your public support test. We get this question all the time. And what that means is they're afraid that if they give you too much funding, they're going to tip that percentage, that 33 1/3% you need to pass, so far that you'll drop below it and fail. And they don't want to put the organization in that situation. So you want to make sure you're paying attention to that public support test. You want to make sure you're looking at what's called your excess contributors. Those are the donors to your organization that get limited in that test. There are certain rules about who gets limited, who doesn't. We've seen a lot of errors where people are accidentally picking up donors and limiting them and inadvertently lowering that public support test when they shouldn't be. So you want to make sure you're monitoring this. I know it's complicated, but you want to get an understanding of it, because this is the most important schedule you could be filling out. If you do fail, it's not the end of the world. You have options. You can convert to a different type of public charity. Maybe you do get fee-for-service revenue. You can pass that test. You can switch. You don't need IRS approval to do it. You can get it, but you don't need it in order to do it. There's also unusual grants. So I'm sure a lot of you've seen in the papers recently, the last few years, Jeff Bezos and Mackenzie Scott are giving away significant dollar donations. Those could be deemed unusual grants. And the way they work is it's as if they didn't happen on your public support test. So you want to make sure that if you are getting funding of that size or funding that may endanger your support test, that you're looking into that rule the year it happens because you may be okay. So you have options if you fail, but you do want to make sure that you're paying attention to this test, you have an understanding of it. Ask the questions, make sure you know what's happening, what's being limited, and why, so you can prepare for this test, because it's a key test for public charity, and it's a key test that we see a lot with funders. And then the last thing I'll end on today, just because it's a political year, we just want to bring this up about political activities and what you can and cannot do. So if you're a 501c3, you cannot do anything political. You can't say, we vote for this candidate, vote for that candidate. You can't make contributions to someone's campaign. That is prohibited. If you do that, you could lose your tax exempt status. It is just not allowed by IRS regulations. However, you can lobby. So a lot of times people feel that they can't do any lobbying because they think that's political. Lobbying is not political. Lobbying is allowed by public charities. You're allowed to attempt to influence legislation. So you can do that by trying to influence the public opinion on something. You can also do it through communication with members of a legislative body. So you can hire an outside lobbyist to lobby on your behalf. Your employees can lobby on behalf of the organization. Maybe there's a bill that you really want passed that will help your organization. You are allowed to do that. You can't have lobbying being the sole focus of the organization. That could result in issues. There is a protective election called a 501h election that you can make. It caps your lobbying based off your overall expenses of the organization. It caps out at $1 million, depending on the size. It's a sliding scale that you go through. But by making that election, you're protecting your organization. If you're doing lobbying, the IRS cannot come in and say you're doing too much lobbying. So it's something to consider, to think about, especially this year, because we are in a political year. So you just want to pay attention to this. Don't do anything that's political. Don't make a contribution to anyone's campaign. But you can lobby to influence. You can try to get a bill passed. That is acceptable. And with that, I hopefully didn't scare anyone off too much with all the tax potential issues that are coming. And I'll turn this back over to Mark.
All right. Thanks, Melissa. I thought you told me this was a feel-good presentation.
I really tried.
You tried. I had to take my jacket off. Things are getting so steamy. But thank you. Lots of information there, and I think people benefit from having these slides as well. So I thank you for that, Melissa. As you can see and hear how important it is to get your filings correct. So it's not just simply just getting through that 990 and sort of filing it and whatever. The IRS is really paying attention to what's on those forms, as is New York State and other states as well. So thank you, Melissa, for that. So we're gonna now switch gears a bit and invite Suma Chander to the stage. And Suma is going to talk to us about artificial intelligence. Okay, and doing that, Suma, I'm just wondering, is this really you, or is this an AI generated image of you, and how's that all going to work?
I'd like the audience to put it on the poll what they think.
Yeah, okay, there you go. All right, well, enjoy, and we'll see you in a few.
Okay. Thank you so much, Mark, and thanks everybody for taking the time to join us today. As you all know, I'm sure everybody's hearing, like, we are at the cusp of a very big technological revolution right now. And at the forefront of all of this has been artificial intelligence. So I just want to kind of delve into a little bit of what this is, what are the current industry's trends, what are the various innovations that are happening and the speed at which they're happening, and the importance of adoption as well as adoption with care and the risks involved and what you should be looking out for. So if there's any questions at any point in time, please feel free to put it on the chat. And I did ask a few questions from all of you, and I really would love to see the answers. And I'd like to start with, have all of you been using any type of artificial intelligence tools out there? May that be ChatGPT, which is just a plain large language model, or any other type of AI tools? And is your organization adopting any of the artificial intelligence frameworks? Have you been thinking about the strategies? Have you been utilizing the efficiencies that's currently available in the market? I would love to know, because we at PCAF have been making a lot of working with a lot of our clients and advising them on a lot of these different areas. And I know there's been a lot of speed and interest and in people and organizations to actually do this. So I'll just start with, let's start with, what is artificial intelligence? Well, artificial intelligence is a science. It's a computer science branch of computer science that aims to create machines that are capable of thinking like a human being, right? And this is not new. This has been around since 1959. It was originally invented or discovered when in Dartmouth University by a researcher, when they decided that we want to really know, see if a computer can think like a human. And there are various different blocks of artificial intelligence. Artificial intelligence consists of multiple segments, if I may say, or multiple science that's involved in bringing it all together. I'm sure you all heard of machine learning. Then you must have heard of deep learning. You must have heard of large language models or generative AI, or any of these things that you must have heard of. Artificial intelligence consists of all of these different components. If you want to kind of quickly go through what are these different components and how is it currently being used in the social sector and across all different areas of the world, actually. Machine learning is pretty much, I'm sure you heard of coding. You give if then statements to a computer, it comes out with an answer. Machine learning is a part of teaching the machine how to understand patterns in data and interpret the data and come up with answers by itself. That's machine learning, and what kind of algorithms you use for the machine to come up with these interpretations strategically is advancing at a very rapid speed. And again, machine learning has been around for a very long time as well. Now, the second part of it is what we call deep learning. What is deep learning? Deep learning is actually where the machine uses neural networks. What is a neural network? Our brain works by neural network. We have neural networks in our brains, and information gets inputted when we perceive information through audio, video, data, writing, looking. The information is perceived in our brains through these various nodes that are interacted or interconnected with each other. They kind of talk to each other and they come up with an analysis. And then based on what they're seeing and the interpretation and the logic, it moves to the next node. And there's layers of these nodes within our brain. What we really did is we took the way that the neural network is in our brain and we tried to replicate it as a part of deep learning. And why do we call it deep? Is because we embed these layers of neural networks into the learning, where we are transmitting the information from the external objects like vision, like for example cameras, audio, text, whatever you're typing, and the machine is now able to interpret similar to how a human brain interprets through using deep learning, where neural network is embedded into these networks, and then it's able to give an output. I'm just explaining this to you in a very simple terms, that way you understand why we say AI is so similar to a human brain. Why is it able to do all of this? Because we actually took a neural network of a human brain and we tried to get the machine to work like it. So the output layer then responds to the input layer depending on whatever it is. So the latest innovation in terms of what's happening with AI and Gen AI, etc., is what we call multimodal application of artificial intelligence. What is multimodal application? It really means that it's able to take visual, audio, text, and everything. Like the applications, I'm sure you have seen the GPTs that are out there, like DALL-E is one of them. You can tell ChatGPT on a text saying, produce an image of a cat and make the cat look like a big furry black cat and place the image in 1930 New York, right? It's able to actually take that information from me or anybody and produce an image of a black furry cat in a New York that looks like in the 1930s New York. So that is incredible in terms of what it's trying to do. That is multimodal. It's able to take the information, it's able to produce an image, it's able to gather what 1936 New York looked like based on all the data that it sees and spit out an image for you. So that we are at that stage right now, where we are able to produce PowerPoints, we are able to produce solve mathematical problems, we are able to produce images, audio, video, etc., using AI. And all of this is a part of the advancements that are happening in neural networks, deep networks, Gen AI, and what we call multimodal AI. So I kind of put some of these, like what these latest innovations in AI and trends are, because I think everybody should be aware of what's happening and the speed of which it's happening. Now, apart from multimodal AI, there's also something called an AI agent, which I want to explain what that is. GPTs, or I'm sure you've heard of it, it's all out there. GPTs can also be tailored to, for example, do specific tasks. And for example, you want to buy a ticket to go to Bali, and you don't want to spend any time looking for tickets and cheap tickets and business class tickets that fly out in the evening 5 p.m. You just want an agent to do it for you. It looks for a price, cheapest price that's out there, brings back the data anytime it sees it, according to the specification. And you want to build an agent that does exactly that, but you don't have to worry about it. You can. And it is just done through a very few prompts. So some of the latest innovations where people are really using AI to improve their life and efficiency is they're building these GPT agents that go do these little tasks for them, where they're not chasing tickets or they're not doing all these little tasks themselves, but they're getting the agents, they're writing these little agents with prompts to do these tasks, and it's able to go do it by itself. You don't have to do anything else. And there are lots of these agents now that are getting deployed, and and you're able to do it yourself. You don't need to be a programmer. You don't need to know a lot of anything to write these agents. It's pretty simple. You can actually teach yourself if you learn how to write a GPT. So I actually encourage everybody to kind of look at what's out there, what you can do, because it will bring efficiency to you. And there's a lot of advisory work we are doing in terms of just telling people how to help themselves, create efficiency in their day-to-day by building these agents. The other part is also called I'm sure you heard, self-driving cars. Self-driving cars, this is driven by autonomous AI. What is autonomous AI different from AI agent? Autonomous AI actually makes decisions on its own. An AI agent, you tell it what to do, and it goes and does the task by itself. It doesn't make serious decisions by itself. It just does what you want it to do. You deploy it, and you go do what you want it to do. An autonomous AI is fed a lot of data, and it's able to interpret the data, and it's able to make decisions based on the data and the patterns in the data. And the example of autonomous AI is self-driven cars. So it's given a lot of this huge amounts of data. It's going to look for the curbs, it's going to look for the buildings, it's going to look for the lights. It's already trained on how to respond to these various situations, and it continuously improves itself as the more the self-driving car drives, the more intelligence it's getting from by gathering all this data, and it is driving itself beautifully. That kind of autonomous is called autonomous AI. And then, of course, there's so I've explained agent, autonomous, and multimodal. Trustworthy AI is there's a huge push because of a lot of the mystery around how AI models work, etc. There's a lot of push in terms of regulatory requirements and from the big tech in incorporating explainability in AI models. So what does that mean is, how does an AI model make decisions? What are the parameters? As the algorithm is going through various steps and spitting out, going to the next step, they want the algorithm to kind of explain to you on how it is interpreting the data. So that's one, and explaining it on the premise based on which it's making these decisions. What does this do? It provides more transparency in terms of the kinds of data it's using, why it's making the decision it's making, and this brings a lot of more adoption, trust in people. In adopting AI models. So this has become very critical, especially in the health and medical field, because they're starting to deploy AI models for surgeries and robots and very complex diagnosis that it's definitely making things very fast, and it will it's helping really foster innovation with a lot of great speed. And I'm sure you all know and heard that COVID vaccine, the speed at which it came is because of AI, is because of deep learning models and the speed at which they've crunched large amounts of data and come up with results. So that's a real-time example, and we have seen the benefits of it recently, and adoption has increased drastically on the AIs in the healthcare sector. So that's one example of why traceability and explainability and interpretability and is become more and more important and crucial for a lot of different sectors to be able to adopt AI, because they don't know what's happening. There's a lot of mystery around what this is. So that's definitely, and the tech companies are definitely taking in that feedback and responding to the world on how you can use this technology. Another thing that is actually, I'm just amazed at the speed at which this is happening, democratizing AI development. So AI is, like initially OpenAI, large companies like OpenAI or Anthropic, I'm sure you've heard of these large companies, or Google's DeepMind, they've come up with these large language models. And building a large language model is not easy. You're collecting huge amounts of data. It takes tens of millions of dollars. A large language model is ChatGPT. It's a large language model, right? So it's a way of actually the way you're interacting with these large amounts of data in text, and it's able to respond to you. It's not easy to build something like that. It takes a lot of technology resources and money, and most companies don't have that resources to do it. So what they have done is these large language models like OpenAI, they've given their source, and there's a lot of open source out there where you can work with the current large language models that have already been built, like OpenAI, and interact with them through APIs and write and actually leverage the current existing LLMs to build your own, fine-tune it for your need. So that is becoming, because of that, it's become much cheaper and much easier and accessible. Use of AI has become, adoption of AI has become easier and easier. So there are 4 levels of how you can think of adopting AI within your company, within your organization. So one is just building a large language model, which we don't want to do. Then fine-tuning a large language model, which will still require technology resources. On top of that, using the open source that's already available through OpenAI or other that's online, and using some resources to and the APIs to create what you want it to do. For example, for a lot of non-for-profits are using it for marketing purposes, donor data in terms terms of collecting, putting their donor information and analyzing the patterns within their donor data, and having targeted communication, predictive analysis, which has already been existing, but it's become much more swifter in terms of how you can analyze this data. So a lot of the non-for-profits have been using it for this, and also that's another way of adopting AI. And the easiest and quickest and available right now is we have AI tools. Like we have AI tools that are open or online, available, with very little money. Most of them are subscription models, where you can use a tool to build PowerPoints. I don't do my PowerPoints anymore. I have an AI tool to do my PowerPoints, and they do it in 5 minutes. It depends on the prompt you give. It depends on the Word document you upload, or you already have a PowerPoint, whatever it is, they can build it very quickly. So that's another way to do it. So there's these various frameworks, and of course, the thing you should be aware of is the data, right? So it's like the thing also that has changed from the last time I've spoken to people about AI and the tools, is there's something called retrieval augmented generation. This is a new methodology of data retrieval, where before a lot of these models, we were training huge amounts of data. You have to get the data right. You have to make sure it's cleaned up. You have to make sure it has the right information, like ChatGPT, which is a large language model. But also what the RAG does, what we call RAG, it also goes out, looks at the internet, looks at all the data in the internet. So it's not just looking at the data within the transformer that you've trained it to look at. It's also looking at information online, and it's able to bring it, and it's able to kind of compare, to see if there are any anomalies. And what that's done, it's reducing what we call hallucination. The hallucination was error, the errors that the transformer was giving because it didn't have enough data, or it came up with its own data because it was not trained properly. A lot of those corrections have happened because of this RAG methodology, where the information you see on ChatGPT now actually say, you want to check for hallucinations, you actually click the button, it actually checks for hallucinations and say, okay, this is not, this is 100% accurate, because it's actually going and looking at the data outside and also comparing it. So this is very rapid innovation that actually happened and is really taking off in the last 3 to 4 months. So I think that was a lot of the technical stuff and the innovations and the changes that are happening. On this slide, I just kind of put some a real life example on how the AI is being adopted in the non-for-profit world, in the fundraising world, and especially within the health and healthcare sector. It's really being adopted. I can say that specifically for the non-for-profit sector, the data and data privacy and how you handle your donor data is a very critical component of it. If you're considering adopting any type of LLM tuning or using any type of predictive analysis tools, or even ChatGPT, but ChatGPT within the private enterprise, now you don't have to use public GPTs. You can use privately within the privacy of your organization, where even if the data is on the cloud, you can it's segmented just for it's like your private cloud, and so your donor data is still very protected. There are a lot of data governance, data security, and frameworks that are already out there in the market, which was not the case last year. It's how you store the data, right? So you have to think about, if you are considering a private cloud where you work with your own predictive analysis, your own private GPT, or a closed enterprise LLM, you should definitely consider how you protect your data. We have something called data pseudonymization. Yes. So what that means is, really, if my name is Suma Chandar is stored in the database, instead of saying my name Suma Chandar in the database, you'll be storing it as head of technology advisory PKF O'Connor Davies. So there is a level of some level of security already out there. Right? My name is not there, but it's stored in another form. So that's called pseudonymization of data. So it's how you build your data, how you encrypt it. There are multiple levels of encryption that you can be guided on. There are companies like, we guide people on that too, on data security, data governance, data frameworks on using this data. And if you follow these frameworks, you're quite protected to a great extent. And also there are so that's one you should definitely consider. There's also something called, just like how you monitor your network, your security, your cyber security, etc. We have something called LLM monitoring now. So if you don't know your employees, if they're using ChatGPT, and what are they really doing? Are they putting in your private donor information into the GPT? You want to make sure that that doesn't happen, right? Because you don't want that to go into the public cloud. So they have come up with something called LLM monitoring. There are tools out there that monitor the LLMs, that look for keywords, that look for, most of the AI transmission of data happens by token size, what we call tokens. Think of token as a word, right? So by the amounts of tokens that are put in, and the traffic that goes in and out of your network, these words that are being used, the keywords that you monitor for, what are the costs that the company is incurring in terms of transmitting high volumes of data, or is it? So all of this can be monitored, and red flags can be put out. That is one high level of monitoring, that security that could potentially be useful for your company. There are plenty of tools out there, and we're happy to help with that as well. But something to think about. But that's another, ways to think about adoption of AI as you consider security of your data and your networks, etc. So just kind of going through the next slide, I kind of wanted to put out there, what are the places where non-for-profits space is using AI, is mostly, getting the right data from the market in terms of powering your analytics and your dashboards, making more data-driven decisions become a lot more easy. This was the case before, but become a lot more now. The city of New York, for example, is controlling crime rate through machine vision, collecting all the data, and is able to actually come up with dashboards and future analysis on where they expect crime, etc. more, and they're able to deploy police force, according to this data that they're gathering, and it's become very extremely useful in terms of controlling crime rates. So that's a part of predictive analysis, but more in terms of vision, and using machine vision for that. And also there's a very large improved donor engagement. It's how your thought for example, we do a lot of thought leadership pieces, how they fare on the social media in terms of SEO. Are they showing up at the top? There are a lot of tools out there that are now monitored. You can use AI to kind of see and monitor how you're doing, how your marketing pieces are doing, using these tools that look for SEO approvals and ratings, and how high they are on the thing. So that's being used highly for marketing and donor outreach and so on. So in terms of challenges and considerations of AI adoption, I've talked to quite a few different sectors in the area recently, and I see that some of the biggest constraints are really beyond, forget the technological resources, but also there's a lot of fear. There's a lot of fear of adoption because they don't know what it is, and they think, people think it's something that's very mysterious. But I really encourage everybody to say that it's not. It's already, everybody's using it. It's a part of everybody's, like starting to adopt it, want it, use it. I say, like, Google, look for tools out there, understand what it, the constraints, like read a little bit about it. There are a lot of websites that teach you the basics. Really, once you start understanding, have some basic understanding of what it is, what are the tools out there, what are the simple things, you can definitely adopt, and you should adopt and make good use of it. So I say go for it. Be aware of the ethical concerns. Be aware that, as long as you're careful with the private, take the right precautions, you're fine. And also, if you're planning to really train a whole data model, make sure that you do it with the right experts and they know what they're doing. And you collect a comprehensive sets of data so that the biases are reduced. A lot of the issues initially around data biases were because there was not the full sets of data was not available. They're only available, say, where there were gender-based issues, they are like, race-based issues, that you don't have enough data, then you don't get the right answers, right? So it's important for the data sets to be extremely comprehensive. So that's a critical component of making sure the algorithms are accurate if you're considering building your own models, like data models within your organization. So I kind of put that here in this, what you should be thinking about in terms of bias and discrimination. Be very aware of the privacy and data rights, and making sure that there's a human agency always in sync with and the data is governed and ethically governed properly. The future is going towards quantum computing. It's using quantum science for the speed to improve the speed of crunching large amounts of data. And that is why NVIDIA, as you know, their stock is going really high up, because the computer chips that we use are not able to handle these large amounts of data anymore. So the AI is now moving towards quantum computing and quantum chips, and using that as a part of computing power, etc. So basic conclusions are basically use it, harness the power of AI, understand to embrace it responsibly and adopt it, really invest within your company technology resources and successfully building that capacity, and collaborate with partners. There are a lot of partners out there, technology partners. PKF has been working with a lot of different areas of it. Really collaborate, reach out, and just go for it. That's really it. So that was my few. I hope that was a presentation that was helpful for you in terms of understanding the market and the innovation and what's happening. Any questions, please reach out to us, and
Thank you, Suma. I'm glad you're on our side on this one, but you, of course, are available for any questions and any sort of hand-holding that we might need through this process. Obviously, it's something that's new and just getting started. I don't know if that's even true, getting started. I mean, I guess it's been around, but for people like myself, we're just learning about these things and the best applications and what might work best for all of us in terms of job efficiencies and such. So
yeah,
whole new world out there.
Yeah, absolutely. Yeah, we're here to help, here to answer any questions, and feel free to reach out to us. Thanks, Mark. Thank you so much.
Okay, great. Thank you. Okay, one more speaker. We're bringing back Alex for one more session here. And Alex is going to speak to us about best practices for internal controls and governance. Okay, so Alex, take it away and bring us home on this one.
Okay, thank you very much, Mark. Okay, so best practices. So yes, thank you. Very happy to be here with you to bring it home. And hopefully you've enjoyed the seminar today. You've learned a little bit to kind of take back to your organizations, and really anything that you need, we are always here to assist. Best practices for internal controls and governance. And again, maybe we can kind of term this as better practices. Right? I know there's never the best, so to speak. So we can go with the better. And hopefully these are things that your organization might already be doing. But we are hopeful that these are things that if you're not doing, that you can kind of, implement in your organizations right away. Governance today are very, very important. You heard today from Melissa, from Suma, things are changing very, very drastically in the world that we operate today. We had a pandemic. We're coming out of a pandemic. I know in conversations I've had with Melissa, the IRS, when it gets to the exempt practice, they're gearing up again. They've gotten bodies, they've gotten people, and now we're seeing people are going out there. They are knocking on the doors. Hey, we've been gone, but now we're back, and we've got about 24 questions for you. Where is this? Where is this? Where is that? So looking at these best practices for internal controls is not necessarily a bad thing, and it's definitely something that you want to be considerate of. So we're going to take a look at that. So first thing that we see over here, first slide, is of course our agenda. So what is our agenda? To discuss the best practices for internal controls at not-for-profit organizations. Okay. Second, to discuss common deficiencies identified in financial audits of not-for-profit organizations. So we have 5 questions that we want to pose to you all as a group. And, we want you to kind of think about the answers to these questions as we go through it with you right now. What are you seeing? What are you encountering? And are these things that you're doing? That to me is most important questions. Are you actually doing these items, these questions, these matters? Okay. So the first question that we see, what type of culture does the organization have? And you may say, well, Alex, I'm not understanding. You're talking about internal controls. So why would you be talking about this culture? So for those of you that may recall, when we look at the internal controls, kind of give you a little bit of theory with this. So internal controls is kind of like a little bit of a matrix, and there's 5 elements that we look at. One of those elements that we look at is the tone at the top, the control environment, I believe is what you all would remember it as. And the tone at the top is your culture. What kind of a culture do you have? Is somebody reviewing? Is somebody going over items? Is somebody paying attention to what's going on? That's what we want to be looking at. Are there meetings going on a regular basis? Yes or no? And if the answer is, yes, we've got meetings, we've got all these great things in place, fine. If the answer is we've got a lackadaisical, management style, that could open up opportunities for people. And we're not talking good opportunities. We're talking opportunities that could be scary, that somebody could be stealing, somebody could be, manipulating. And we don't want that. What controls and policies are in place to prevent and detect fraud? Well, Alex, that's your job. Hey, it's not our job. Our job is to plan to try to see what we have in the audit that could be fraud and then adjust our procedures accordingly. And, you as an organization need to figure out what are the policies, what are the procedures in place to prevent and detect fraud. Are there policies and procedures? Have you all sat down in a meeting and said, gee, these are the areas we believe are the most vulnerable? And we'll give you the best example, IT, information technology. Can somebody hack my system? Can somebody hack my payroll? We hope the answer is no. What if the answer is yes, they can? What are you doing to prevent it? What are the main funding sources? Are we economically dependent on them? Because again, Alex, why is that internal controls? Well, because internal controls is allowing us to ensure fiscal accountability and responsibility. I am dependent on the government. Now, again, if the government is planning to go under anytime soon, we got bigger problems in this slide. But let us assume that the government is going to be healthy and strong, but may not be giving out grants like they did. They're not doing it. Don't have the capacity. Okay. What does that do for us? Gee, I'm a social service agency. I'm dependent on the government. Well, now you got a problem. What is the organization's fiscal health? Again, we come back to this concept. We saw it this, earlier this morning. Are we healthy? Yes or no? Healthy is a very vague word. Healthy could be, do we have cash to pay the payroll? Do we have cash to meet the union dues? Yes, we do. That could be health. Do we have a positive net asset line? Okay, yes, we do. That's what we want to be looking at. different health can you survive? What is the succession plan? I think what we saw post-pandemic was people reevaluating things and saying, you know what? I've been doing this 100 years. I don't want to do it anymore. I don't want to do it. I want to give up, and I'm no longer going to be the CFO. So now that brings a little bit of a different question into play. Who's taking over? Or I've been the CEO for many years. I'm going to be leaving. Who's taking over? These are things that impact your internal controls, because if you don't have this in the right, area, well, you're definitely going to have a problem. So to expand, going back to culture, what type of an attitude do your employees have? Do they get along with others in their department? We all work together, whether it is live, whether it is Teams, whether it's Zoom, and we've got to respect our colleagues. Is that happening? Do they feel secure in their positions? Are they afraid that at any minute they're going to lose their job? Management doesn't tell us anything. Are we going to lose our jobs? They don't tell us anything. That's not a good thing. That's not a good thing. Do they feel valued? Sometimes a simple thank you goes a long way. That's all part of the culture. You know what? My boss values me. They love me. I'm part of a team, as opposed to I'm another brick in the wall. For those of you that remember that song from a while ago. And if I feel valued, I'm going to do what I have to for the company, as opposed to this company doesn't care about me. I'm not going to care about them. And you know what? I'm going to steal from them too. Do the individuals leading set an example of ethical business practices? Do they admit to making mistakes? You know what, boss? I made a mistake. Thank you for catching it. Or are they defensive? No. I didn't make a mistake. The system's wrong. There's a problem here. This isn't me. No. I don't know what you're talking about. Not me. Scary. It's scary when we hear that. That would be scary. Do they enforce and emphasize the importance of controls? Hopefully they do. Is there an open environment that allows employees to come forward with issues, questions, or ideas? It could be a hotline or an open door policy, but if an employee feels, well, no, if I go into that guy's office, they're going to use it against me later on. I don't want that. I don't want to be in that kind of a situation. All of this culture plays negatively when it comes to internal controls and governance. Fraud. A toxic culture now goes back to that slide we saw earlier, incentives to commit fraud. There's a toxic culture here. My boss has said to me, I need to raise sales by 20% in the third quarter, or I will be terminated from my position. Wow. Scared. I'll lose my job. My family depends on me. What am I going to do? You know what? I'm going to be aggressive in my recording of revenue this year. And if I got to make it up, I'll make it up. Not a good thing. Definitely not a good thing. Are employees disgruntled? Haven't given me a raise in 6 years. I'll show these people. And it doesn't have to be, we think of fraud as stealing. It could also be such a thing as stealing time. Boss thinks I'm working today. I'm on Teams. And I've just stepped out for a 6-hour lunch, and they won't know because I've played around with my Teams that it's going to show that I'm available all day. What's being done to prevent fraud from happening? Good system of internal controls, whistleblower policies, a good, strong tone at the top. We use the word strong. Notice we don't say the word kind. Firm but fair. Do your employees respect you? Do your employees know what to do if they become aware of fraud? That's a great question. Who are they going to go to? Who do they report to? Are they safe? If I don't feel comfortable in reporting a fraud, I'm not going to. Funding sources. Where does your organization get most of its funding? Oh, it comes from the donors. Federal, state, or private grants. Investment income. Auxiliary income. And financing. Line of credit, bonds. Where do I get the funding from? Hopefully, many of you, donors, federal grants, hopefully you've got a combination of those two, because I think, as most of you have seen, just relying on the feds, not a good thing. Not a good thing. Because, again, they're limited with what they can give us. So many organizations do try the balance of donors as well as federal. We put on the bottom financing. Again, nothing wrong with it, but just be aware when you're getting a loan, it's not a donation. The bank's going to require you to repay them at some point. So you just need to be aware of that. If any of these sources were dramatically reduced, what does that do for your, what does that do for your, survival? Okay. Are there any requirements that are attached to the funding? Grant compliance, donor restrictions, debt covenants. These are things we got to be aware of. And again, we don't want you to get paranoid with these things, because I'll tell you, these are all things that if you are on top of your game, is easy to fix. Can't tell you how many times, though, in our career, we've seen that clients are not doing these things. They're not looking at the bigger picture. Oh, I'm going to get a loan. Great. $1 million line of credit. This is excellent. Oh, wait a minute. There's some debt covenants. Am I going to be able to meet those debt covenants? Donor restrictions. Again, we love donations, but again, what are the best ones that we love? Hopefully you're all saying without donor restriction. No strings attached. That's what we really want to say. Succession planning. Yeah, this is big. This is big. I think every organization struggles with this in any industry, in any walk of life. Who is taking over when someone leaves? Who is taking over? And we're talking about a planned leave. We're not talking about someone who quits tomorrow. That's a variable. We don't know that answer. But for the future, who are the future leaders? Oh, someone's been at the organization 50 years and they've decided it's time to retire. Okay, well, who is the heir apparent? Are we going to promote from within the organization? Are we going to hire from the outside? And again, you've got to be prepared when we talk about that, because what does that mean? We're going to promote from within. It's one of our own. It's one of our own that have been promoted. We're great. We're happy. That's wonderful. Now we bring in, though, a stranger from the outside. Yep, our CEO's retired, everybody that you know, and we've brought in this new person, and she comes from the outside. Is that somebody that we want to really have? We're not sure. Really not sure. So we'd have to kind of see what the story is with that also. Provides a growth opportunity for current employees when we have succession planning. We need to plan for that. And again, this could be a couple of years out. Gee, the board may say to your CEO, what, happy 65th birthday, and congratulations. We hate to have the hard conversation, but what's the plan for retirement? Oh, I plan to retire in 5 years. Wonderful. Okay, fantastic. Who's the heir apparent? Who do you see taking over for you? To be honest with you, nobody. Well, if we got to start a national search, we need to do so right away. And plan for resistance. Nobody likes change. We are all humans. Okay. Sorry. We're all humans, rather. And we just need to make sure that there is going to be resistance. There is going to be resistance with this. And we just have to manage that resistance. So now let's talk about some common deficiencies that are identified, as we go through our time together. We talk about, these governance procedures, internal controls. What are the things that we want to look at as we look at the best practices? Well, common deficiencies are identified in several areas: account reviews and reconciliations, expense reports, releases from restricted assets, governance documents. So the first thing we can identify is account reviews and reconciliations. Account reviews and reconciliations. Banks' pledges, investments are not done on a timely basis, and the reconciliation doesn't agree with your general ledger balance. No indication of a formal review or approval even being done. So that's not a good thing. That's not a good example of governance. And as we saw in our first slides together that Eunice and I presented, it doesn't help you get ready for an audit. So, if it's not being done timely, doesn't agree to the general ledger, there's no formal review being done, what does that mean? What does that mean? Who's watching? Who's going? So again, what's the best business practice? You got to be reconciling throughout the year. This should be done on a quarterly basis. There's a reason why you're seeing the repetition from the earlier slide. It's very important. And we're not just talking about to make your audit easier. We're talking to make sure you're not missing anything. Expense reporting and credit card usage. Again, what are the common issues that we do see with this? No policies. Who's using a credit card? Why are we using a credit card? Who's got custody of the credit card? Are there approval transactions? Are there, things that we identify? And again, the process there would be how to report the expense, what to include, how employees are reimbursed for expenses. So again, that's important. And a lot of times we do our audits, we do see that there is problems with the credit card usage here. Make sure employees understand the legal requirements from the IRS to support expenses. It's got to be a business reason. Make sure that the employee and managers understand the responsibility. All right, we're taking out a donor and the donor is going to go to a lunch. Or, we're not for profit. We're not going to be going to the best lunch around and ordering alcohol and drinks. We got to be careful with that, especially if we're using, money that may be a grant. And very importantly, is somebody approving the transactions as well? That's also very important. A lot of times we've noticed there are CEOs, they have a credit card. Who reviews the CEO's credit card? And the answer we're told is the CFO. All right, there's a review, but is that the strongest review? Not really, because that CFO is not going to question or challenge their boss. They're not going to do it. We know that. But we do know that maybe the board, on a periodic basis, I'm the treasurer, I'll be reviewing your expenses, Mr. CEO, and I'm going to want to see backup and support. A credit card should have receipts for everything. Now, again, in light of what Sumler is saying, AI, technology, everybody's got an app. Go to lunch, scan the application in your phone, and submit it right away. It's another good way of doing it. Releases from restrictions. Common issues. Organizations do not keep track of releases during the year. They do not keep track. Again, this is a big deal. When I give you a donation, I want you to use it to feed the homeless. I want to make sure you're tracking those expenses. We see sometimes that's not the case. Sometimes little to no activity for an extended period of time in certain fund balances. Organizations are not releasing funds from restrictions when purpose or time restrictions are met. and are using unrestricted funds to cover expenditures. So again, if you have with donor restrictions, technically you should be using those first. That should be first that you're using. You shouldn't be using without. You should be using the donor's money, but you got to make sure you're keeping track of it. Best practice recommendations, let's reconcile quarterly. Gee, we have a grant. The grant is from the Gates Foundation. It's $1 million to feed the homeless. You know what? Let's make sure our general ledger is tracking those expenditures so we can release that money first. We don't want to use our own money. So that's important. We oftentimes will recommend to people to review the composition of all your restricted net assets. Ensure all restricted funds are still relevant to organization. Sometimes you may have situations where, oh my goodness, we've got the money. And you know what? We already spent it, so let's release it. Or we've been in situations where somebody may say, we got this grant and we got this endowment, many years ago. You know something? We have this endowment. We don't do the program anymore. So you know what? What are we doing? Why are we managing this money? Let's go back to the donor's family and say, Ms. Donor, can you unrestrict these funds and possibly let us use it for general purposes? Nah, we really can't do that. Okay. Then let's find another organization that might be able to help you manage and do better with this. We're not going to be able to accommodate. So these are things that you definitely want to look at from a governance perspective. Governance documentation, making sure you have a formal accounting policy manual, again, on the intranet or whatever it may be, but it's got to be updated. Times have changed. People are now working. They're working remote. They're working live. You've got to have a formal policy so everybody's on the same page. Big thing we're still seeing, and Melissa always is harping on clients that they've got to do that. You need a conflict of interest policy. You need a whistleblower policy. You need it. It's just important in today's day and age. The best practice recommendations that we can offer is, having a manual that's up to date. Many of you that use us, we have consulting and advisory that can go in there, again, apart from the audit, independent, and say to you, hey, let's look at that manual. Let's see what we can do to help that with that document. This document's going to be the basis of your internal controls, and it's got to be followed consistently. So again, we talked about a formal conflict of interest, formal whistleblower, and conflict of interest should be done, annually with the board and your leadership. And that doesn't have to be on paper. I've seen situations that they use the surveys, different survey monkeys and everything else. So it really is amazing what you can do with the technology now. Conflicts can do, more with the duality of interests rather than financial conflict. So, again, is somebody serving on the board and they're also the president of a company that you do consulting with. All right, if we're going to be voting on a project, they may not obviously be, allowed to participate in that vote. Take the time at the board meetings to discuss the types of hypothetical situations that could result in a conflict as well. Best practice recommendations. So make the whistleblower policy readily available or known to employees. Ensure that employees are protected against retaliation. The reporting is anonymous. Should even be outsourced. We've seen that being done too by different clients. And finally, financial health audits, possible remedy for deficiencies. We go back to the audits. Internal audits. Do you have an internal audit function? Are they looking at internal controls? This can be done by an outside firm, by a consulting firm. This is important if you're getting federal or state funding. You want to make sure that you're following the letter of the law before the feds come in. You may want to do a financial health checkup. All right. Internally, what's our strategy? What is our budget for the next 5 years? What's the forecasting? What's our staffing structures? Are these programs working or not? Be proactive, not reactive. Wow, we've lost over $300 million in a program. Well, where have you been all these years? Be proactive. That's the important part. And again, that pretty much is the conclusion of my presentation. I'm going to have Mark come back on stage and bring it home. And thank you all for being with us today. And please do reach out with any questions.
Alex, while you're there, thank you for that. Actually, there were a couple of questions, and I think they were directed at you in your session. So we just spent 2 minutes on that. The first one had to do with your first session. And the question has to do with, audit readiness and preparedness and making, time for an efficient audit. But the question says, is the magic pill for an efficient audit a pre-established timeline? Is that sort of the most important thing? Is that the magic pill?
I would say that is. Well, I would say it's one of the variety of pills, but that is the most important point, is the communication with management of timing. Yes.
So it's establishing that timeline. It's knowing what those external, internal deadlines are and going with that plan, right? Making sure everyone sticks to the plan.
Correct.
And obviously that's dependent on whether the books and records are ready to be audited. Right?
Also correct. Yep.
Yeah. Okay. And then the next question had to do with your current presentation. So you brought up a lot of points, interesting points as well. So really the person's asking, do most of your clients have a good work culture and adequate to strong internal controls?
I'm going to go with yes. Good culture. Everybody is cordial. Everybody gets along well, is able to work. The internal controls. Again, is there always room for slight improvements? Absolutely. I think Mark and I could say there's always room for improvement, but most of our clients are really able to, pass that test and have good internal controls. Absolutely.
Okay, so you brought up a lot of issues there and what could go wrong and what things to look out for, but in your experience, most of your clients do have a good working culture and
Absolutely. Absolutely.
Okay, fine. There was a question, and thank you for that, Alex. There was a question for Melissa,
Okay.
and this has to do with the audits. I don't know, Melissa, are you backstage by any chance? Nope, there she is.
I'm here.
Yeah, and you may have answered this kind of, but really because of the increased scrutiny by the IRS of the organization's filings and such, has the number of audits by the IRS increased due to the e-filing? They're looking at things, but are they doing it more frequently?
We haven't seen it too much yet. I mean, they've been hiring a lot of new agents. Those new agents are now being trained. So we think it's coming. They've been announcing it. We personally haven't seen it yet. But I think we're all bracing ourselves based off all the e-file mandates that it's definitely on its way.
Okay, so far so good, but you have a feeling that that's gonna.
It's the calm before the storm.
Okay, all right, very good. Okay, that's all the questions I have. Thank you all for joining us. It was our pleasure to present to you, and we hope again that you've got something from this presentation. If you have any questions that come to mind, feel free to reach out to us. We're always happy to respond. I'm going to turn this over to Harleen for some parting words and instructions, and again, we'll see you out there on the audit trail. Harleen? Mm-hmm.
All right. Thank you, Mark, so much for your presentation. And thank you to all of our speakers. And thank you, everyone, for attending. If you have not completed it already, we have launched our survey located in the survey tab of your panel. It will also be prompted on your screen on the right side. Just a reminder, a copy of the PowerPoint slides, a recording of today's webinar will be made available to all attendees via email 24 hours post-event. CPE certificates will be issued within 8 to 10 days via email as well. Thank you again and have a great rest of your day.